Bitcoin is the scarcest, hardest asset known to man, and it is the social covenant that I think will supersede the dollar as we've known it in a way that hopefully in the future will be synergistic for both American exceptionalism. It will be inevitable that governments will buy Bitcoin on their balance sheet. This is something I feel very strongly, but I do also think we have to be patient about it, where it is not likely a rogue decision.
Hey everyone, welcome back to the show. Joining me this week is Jeff Park. Jeff, it's great to see you in person. Thanks for joining me.
I'm so excited to be here. Thanks for having me, Natalie.
Okay, so let's talk a little bit about some of the developments in the space, because week after week, it's like we're getting more regulatory clarity. The Genius Act making stablecoins, they're going to proliferate now. I think every bank's going to be issuing them. There's going to be more competition. Bitcoin's price has been doing pretty well. Crypto report coming out, people wondering when there's going to be a strategic reserve. What are you following most closely, and maybe what are you paying attention to?
Sure. So for the latest, I've definitely been following what's been happening in DC in the construct of the Genius Act, the Clarity Act, all the AML KYC requirements around those constructs of crypto going mainstream. I think it's a huge moment, and we are now seeing the floodgate having opened where a bunch of stablecoin related news are coming out. I think it was yesterday that Interactive Brokers announced that they're going to have their own stablecoin. This is in addition to a slew of not just financial services, but even consumer-facing companies like the Walmarts and Amazon of the world who are exploring the utility of stablecoin as a payment mechanism. I think that is going to be a multi-generational opportunity to come. So that's really exciting. But in our domain and our lane of crypto equities, there's also been a lot of interesting things going on with the ETFs as well. So very recently, for the first time, the SEC has allowed the ability for APs to permit in-kind redeems and creations, which has always been a stickler point from the very beginning of the Bitcoin ETF journey since 2013. And in the event of the ETFs having launched, one of the concessions that was made was that only cash creates and redeems were permissible. And now we actually have the ability to natively contribute Bitcoin into the creation and redemption of these ETFs via the APs, which is an incredible win for the end consumer because it ultimately lowers the cost of trading, lowers the friction, and lowers the count of intermediation that necessitates the production of these ETFs.
Before we go into some of the more recent developments with ETFs, can we actually just take a moment to break down simply in-kind versus cash redemptions? Because there's like a taxable event, right, that happens with the cash side. Why has this been such a big deal, and why has the industry been pushing for it in layman's terms for the average person to understand?
Yeah. The primary constraint historically has been that the APs themselves were not really allowed to traffic in holding crypto assets because there was no regulatory framework for those entities to traffic in providing liquidity for crypto assets themselves. So one of the workarounds was to actually have the APs deliver the cash to the issuers, which don't have the provisioned role of being an authorized participant, and let the issuers actually go to market and then buy the Bitcoin themselves and deliver it back to the vehicle through the trust. So it wasn't so much a tax constraint, as ETFs are very tax efficient in the way that they're already permitted to kind of allow assets to flow without carrying the tax characteristics outside of the vehicle. But it was really more of a logistical maneuvering in which the APs themselves were just not allowed to buy Bitcoin.
Interesting.
APs historically also being usually bank holding companies.
Coin Stories is proudly brought to you by Gemini. Investing in Bitcoin has never been easier with Gemini's Bitcoin credit card. Earn up to 4% back in Bitcoin on everyday purchases like gas, dining, groceries, and more, with no annual fee, no foreign transaction fees, and no exchange fees on your rewards. And this summer, get 10% back in Bitcoin at golf courses. Plus, sign up today and get a $200 Bitcoin bonus when you spend $3,000 in your first 90 days. Apply now at Gemini.com/Natalie. If you're like me and want to stay on top of Bitcoin without getting lost in all the noise, you've got to check out the weekly CIO memo from Bitwise Asset Management. Bitwise has been around since 2017 and manages more than $10 billion across 30 plus strategies. CIO Matt Hogan puts together a quick 5-minute memo that breaks down the biggest stories in digital assets each week. Just go to bitwiseinvestments.com bitdeer.com/CIO memo and check it out. And always, of course, carefully consider the extreme risks associated with crypto. Coin Stories is also brought to you by Bitdeer, a global leader in disruptive technology for Bitcoin mining and high-performance computing for AI. Bitdeer trades under the stock ticker BTDR and boasts more than 2.5 gigawatts of electrical capacity across 4 continents, positioning Bitdeer as one of the most diversified and power-dense computing companies in the world. Learn more at bitdeer.com.
Got it. And now there's something that changed with regards to being able to hold up to 250,000, right? What's that latest
That's
update?
the other big update. Yes. So BlackRock has filed with NASDAQ and the SEC for a long time now, or almost a year, for which the open interest limit on Bitcoin ETF options were constrained at 25,000 lots upon its admission. And 25,000 is not a lot. And actually, if I recall correctly, even in the first week of those ETFs trading, they hit the position limits. In a way, there were some advantages to having that to give fairness to other ETF issuers. So for example, if I wanted to put on a position with IBIT, BlackRock's Bitcoin ETF, but the position limit was hit, maybe you would choose Fidelity or the Bitwise ETF or others where the option chain does exist for those as well. And there is a vibrant ecosystem of arbitrage then that is possible between option chains across the same underlying holding, which is Bitcoin. But it's also a source of friction for investors who want to come in with big size. And so for a while, Deribit, I think, had maintained a pretty steady hold in being the predominant source of liquidity for crypto options. And over time, IBIT has made a serious dent in capturing a big chunk of that market share, both in open interest and across trading volume. And now what has happened is because the SEC has allowed the limit to go from 25,000 to 10 times that, which is 250,000, you can expect there to be a big gain of trading volume and notional interest that is coming mainstream to Wall Street, which is a big deal. The other part that was less public, but embedded within the same language, was they approved flex options as well for Bitcoin ETFs, which historically did not exist. And for those who are not familiar with what flex options are the backbone of structured products. So what flex options permit is the chance for a trader to define some of the parameters of the option contract specifications when a custom solution. So they can pick a custom strike. So rather than trading, a fixed dollar strike, let's say the strategy stock at 400 or 405, maybe I specifically want to trade the 401.67. You can do that now.
Wow.
You can also set custom expiration. So instead of trading on the weekly Fridays, maybe you want one that trades for an expiry on Tuesday or right before earnings or right after earnings. And you can now discreetly set those terms as well. So these are important because a lot of the financial innovation that happens on structured products requires a little bit of that ability for fine-tuning the definitive outcome of those products from a client perspective. For example, when a client buys a structured product, they're not necessarily thinking about hard stock prices and thinking about their payoffs. They're usually thinking about percentage terms. So they'll say, I want to make 10% of something or 15% of something, which equates to these weird now decimal strikes like 410.67. And they usually have an idea of saying, I want a 1-year trade, not one that expires, at a very specific date that doesn't exactly tie up to that 1 year. So these things are important. And I've always believed that the structured products business is ultimately going to be one of the biggest businesses for Wall Street, because that whole business is about monetizing volatility and giving different investors a chance to have different risk preference. And this permits that tooling now in a way that hasn't been done before.
Does opening up these avenues and the more products we have, more options trading, what does it do to Bitcoin's volatility?
It's a great question. I think over time, what we'll see is that the general range of Bitcoin's volatility is probably going to be more constrained, meaning that the fat tail events are probably less likely day to day. At the same time, I don't think it means that they'll go away, which is the reality that volatility can be measured in a lot of different ways. On one hand, the most classical definition is measuring the standard deviation over a 30-day rolling period, which shows you what a normal distribution of a stock movement could look like. But volatility can also mean something beyond that to a second order effect of like a jump risk. So having a volatile stock for the sake of daily volatility is different than something that's not volatile for a while and then one day moves 100%. That would also be called volatile. It just has a different quantitative characteristic to it. So my view is that Bitcoin will always have big tail risk both to the left and to the right of the curve, mainly because that's how commodities trade. This is the big win, of course, in Bitcoin being defined as a commodity and not a security. And in that sense, think about oil, for example. Oil is one of the most liquid commodities on Earth. And yet there are days when you wake up and oil prices jump dramatically and decline dramatically. That's just the nature of what it means to have a scarce asset where there can be supply shocks and otherwise deliverables that are possible. And Bitcoin is exactly the same thing.
Interesting. Where do you think we're at in this bull market? Do you think we're underperforming where maybe we should be? Do you think that we're not going to go that much higher before a decline? Like, where are we at?
I actually am pleasantly surprised by how well Bitcoin's been performing recently in the summer.
Why is that?
Usually, the summer tends to be a pretty boring period for crypto. If you look at the studies of Bitcoin's outperformance, it tends to be in the Q4, Q1 timeframe. And the Q2 to Q3 timeframe is pretty lackluster. I do think there's some seasonality embedded in why Bitcoin behaves this way. But the truth is that this summer, it's been explosively dominated by crypto news. We just mentioned the stablecoin legislation having been an event during the summer in a way that really is somewhat historic.
Yeah.
And on top of that, this particular administration just has so much agenda to get through before the next election cycle would take away some of the news source. And so the urgency and the rush to get things done was really front-loaded into the summer. And I think that has created some upward movement for the stock and Bitcoin. But at the same time, we're at very low historic realized and implied volatility. Implied volatility and realized volatility are both kind of in the high 30s these days. Those are half of the Netflixes and the Nvidias of the world. It's actually sometimes been observed that gold had a higher volatility than Bitcoin in the past 2 months as well. So even though it's been muted, the price has either stayed consistent or kind of gone up in a range-bound way. And the reason it's surprising to me is because usually when Bitcoin hasn't had volatility, it tends to creep down. Because Bitcoin is a lot like your attention asset. People don't pay attention to it, so the volatility goes down and the price goes down. And then once people start paying attention, volatility and price tend to be correlated together on the upward. What we're observing this summer is actually a divergence. Volatility is going down, but Bitcoin is still teetering on the edge of hitting 120 again and potentially higher into Q4. So that's been remarkable to see. I think it speaks to the fact that there is a floor and that institutional adoption is here, for which we've seen consistent demand for Bitcoin ETFs. This summer, we had the second highest source of flows in its history since inception in a way that isn't something you would associate with a summer cycle.
Okay.
So I think there's a lot to be excited about.
So you think it's going higher in 2025?
I do. This I feel more convicted in because Bitcoin is really simple to understand. At sometimes people, I think overcomplicate these things, but really assets move because there's a market and people buy it and people sell it and there's more demand and less supply. And we're entering into the period in which that trend is likely to be accentuated. There's really two reasons for it. One is the top-down global macro perspective, which everyone is expecting the rate cutting cycle to begin. And from bottoms-up perspective, we have now seen tremendous capital raised for the purchase of Bitcoin by these institutional crypto asset treasury companies. And so I think Architect Partners recently put out something close to $90 billion has been put to work in Bitcoin and crypto assets since the beginning of this year. And in June alone, which is a month and a half, it's about half of that money that having been now earmarked for the purchase of Bitcoins once the merger consummations are approved for them to go live. And so there's a wall of money just waiting on the sideline. And guess what? These treasury companies are your most price inelastic buyer because their mandate is to go buy Bitcoin at whatever price. And when you see the overlapping forces of indiscriminate price buying and supply generally being constrained, and then on top of that, there's this dynamic where certain investors are playing this opportunity from a special sits perspective where they're short Bitcoin as a boxed relative value trade. that creates a really interesting dynamic where you have the chance to imagine a short squeeze while these Bitcoin treasury companies are unleashing the energy to come to market. So I'm very bullish, both from the macro and from the bottoms up of what's going on in the Bitcoin ecosystem.
I would love to hear more of your perspective on these corporate treasuries, because we're seeing so many launch, and it's hard to know how they're all going to differentiate themselves, what their strategies are going to be to accumulate Bitcoin. Obviously, they're trying to grow to the level of trading volume and liquidity that MSTR has, right? What do you think about them? And is there going to be this interesting like race playing out?
Yeah, I think it'll be definitely some competitive collegiate dynamics of trying to come up with what is the perfect ideal of what a well-run treasury company strategy could look like. And competition always begets better opportunities for consumers. And so I'm excited for this moment. And I do think we're going to therefore see a flywheel of innovation come through. The thing that I'm noticing is that there is a barbelled perspective about Bitcoin treasury companies. Some people are really interested and they're fascinated by it and they're embracing the movement. And then you see the other people who are just flat out opposing, aghast that's even happening, and reminds the cycle of grayscale and tries to draw parallels around why these kinds of leverage always end up badly.
Yeah, they're calling it paper Bitcoin summer. Have you heard that?
Yes. Oh man, am I familiar with those terms as someone who loves to also traffic in the options market. And the thing is, this is great. This is great news. This is really great news that there's such opinions, because I've always shared the view that the most dramatic price action happens when these two forces collide. You need a lot of short interest that can be also then taken to the other side in ways where thesis can be proven or disproven. And that's what creates volatility. And volatility is ultimately a thing that retail investors really embrace in this opportunity of hyper-financialization. And so I would be more worried if everyone was aligned on the same trade, kind of actually like Grayscale. No one thought Grayscale would blow up. It was kind of one of those, everyone was touching it as if it was going to be the greatest arbitrage on earth, and they couldn't imagine how it would blow up, and everyone piled in on it. Not a lot of people raised their hands. Here, at least, there's an active dialogue. And I think that in itself is a pretty worthwhile thing. At the end of the day, financial engineering is one path of how to bring more Bitcoin per share, which is the predominant financial metric that investors are interested in. But really, the most intuitive way to think about increasing Bitcoin per share is actually just be more productive with your assets to get more Bitcoin per share. I think that is really intuitive, which is if you have a profitable operating business, or you're able to actually do things with Bitcoin to generate yield and cash flow, and you then buy more Bitcoin with it, then you're getting more Bitcoin on a denominated dollar basis, which is good for investors. So I think we're going to start seeing a transition into some of those stories in a more authentic way. And people will be able to really open their eyes and see, oh yeah, this isn't just like financial alchemy. This actually is productivity being captured in an operating company wrapper that's not possible in the ETF wrapper.
This episode is brought to you by Bitkey, a Bitcoin hardware wallet with multi-sig security, inheritance, and a recovery system designed for real life. No complex setup, no seed phrase, just true self-custody without the stress. Named one of Time's best inventions in 2024. Use code STORIES for 20% off at bitkey.world. Up next, the Bitcoin way. There's only one way to protect your Bitcoin from government, politicians, and third-party risk, and that is 100% self-custody. My friends at the Bitcoin way will train you how to do this the right way the first time. No compromises. Go to thebitcoinway.com/Natalie to speak with the experts about making sure your Bitcoin is secure and private. Want to win 1 million sats just by answering Bitcoin trivia? The top 50 players win free sats weekly. One lucky winner gets 1 million sats each month. With Speed Wallet, you can send Bitcoin, swap to stablecoins, shop gift cards, play games, explore mini apps. So don't miss Speed Trivia. Head to speed.app/coinstories and use code coinstories10 for 5,000 free sats. It's been crazy to see that even the president has one of these corporate Bitcoin treasuries, and one of the biggest ones. And you mentioned earlier how much this administration has been prioritizing the digital asset space. A lot of people are waiting for that strategic Bitcoin reserve. Why do you think we haven't seen some sort of plan come out, or a statement saying, yes, we are going to buy Bitcoin and this is how we're going to do it?
It's a great question. It's a really good question. I think that there's a difference between an executive mandate an executive order mandate to buy Bitcoin as a strategic asset versus a congressional mandate. And what we're seeing is the ability to have a conversation around the more important aspect of the congressional mandate by having opened the path by Trump's adoption of the executive order. But the truth is, executive orders are fallible. They can be turned by the next administration if the political views don't align, and they're not stable because you don't have the embedded mandate of the people. So I think the real use case will be that we first need to get a legislatively approved strategic reserve, which I think we're quite far from. And we know Senator Loomis has been a driving force for it, and she is working very hard to build coalition around it. But I think until that happens, the idea of an executive order strategic Bitcoin reserve purchasing Bitcoin is maybe not the most useful kind of permanent capital vehicle that we can imagine. And so if you are coming from that perspective, it's probably not like the most important sign to think about the totality of what the U.S. is doing with the dollar hegemony at risk. So, my view is it will be inevitable that governments will buy Bitcoin on their balance sheet. This is something I feel very strongly, but I do also think we have to be patient about it, where it is not likely a rogue decision. So the view that I've shared in the past with others is because the US is one of many in its global alliance across the trading partnerships and the economic order, there is a social contract in which how we trade with countries like Japan, where the dollar serves as a role for the transfer of goods and capital. And in an ideal fashion, if you were to adopt Bitcoin as part of your treasury asset, it will make sense to me that you do it with some global coordination with your allies, because it would be a slight betrayal of that social contract if you were to stuff, let's say, Japan with all your long-dated treasury bonds and then didn't give them a heads up and just bought Bitcoin on your own, where the very kind of crisis confidence that would otherwise arise is one where they're not being attuned to. So the signs that I think I would wait for to see when a real strategic Bitcoin reserve adoption would happen would be some kinds of global partnership dialogues that are emerging. I think Japan is the one you should be paying attention to, because they have been so far the most kind of quiet around the role of Bitcoin as a developed market. But once you start seeing Japan embrace Bitcoin, then I do think we're ready for that dialogue to happen at the country levels.
That's interesting. I didn't think about it that way, especially because every analyst you hear talks about how we're moving into this more multipolar world and everyone's kind of, retreating and protecting themselves. But you're right. I mean, we are still part of the G7 and we coordinate with other nations, and it'll be interesting to see how that plays out with Bitcoin. Do you think that the country would tap on the shoulder of a big Bitcoin holder and try to acquire Bitcoin that way?
You mean through like a national repatriation type effects?
Like acquiring a company that, say, owns a lot of Bitcoin?
Man, I really, I think, don't think about that too much, because I worry a lot about what that means in general.
Well, they can't go out in the market, right? I mean, what would that do to the price?
Yeah, and you're right, Natalie, because I feel like most of the core treasury holdings of sovereigns have so far come from seizures or forfeitures, right? They're not open market purchases. US and China both have substantial stash that has come from essentially forfeiture. The line here, though, is if you were to do that with some kind of eminent domain to a otherwise compliant private entity, is a line that hasn't been crossed before. And that, I think, would set a different kind of standard that the US generally is not on that side of history for. But I could easily see it happening in the case of a country like China, where they can be a little bit more heavy-handed about their domestic mission and the partnership they have with the private sector, where you can see some of those dynamics come to play. But in the US, I mean, the fundamental principles of capitalism and how the US market operates, it feels very sacrosanct to violate that at the core.
It's a really interesting topic because it's something I didn't think about until I saw Tom Lee talking about it on air. And then it poses all these questions to your initial observation about capital controls versus property rights and all of that. But how else are they going to acquire, like, let's say 1 million Bitcoin? they're not going to do it OTC. Not in my opinion.
Yeah.
And we have seen them do strategic partnerships with companies, for national security purposes, all of that. So I don't know how it's going to play out. I have more questions than answers.
Yeah,
but
no,
I
it's
just wanted to
interesting.
see.
I think if you think about even the construct of like Fannie Mae and Freddie Mac, right? These organizations are kind of quasi-private things. I mean, it used to be more private than today, but
Yeah.
if you think about the fundamental underlying of the housing market being kind of the root of capitalism, and you could still have like a private entity that is able to extend credit for the American people, that kind of feels like the thing that Bitcoin treasury companies can be in the future, right? Private, yes, but aligned with kind of the national mission of credit provisioning or access to property or goods that is misaligned for the country's prosperity. Maybe it's not a good sign that Fannie and Freddie were nationalized, but at the same level, these things are possible based on history too.
When you think about the people, you mentioned earlier Congress and the National Strategic Reserve being something that comes from more of a movement by the people, not top down by executive order. Why do you think Bitcoin hasn't been adopted by mainstream as aggressively as maybe some of us were hoping?
Yeah, I think for those who are just beginning their Bitcoin journey, there's a lot of things that can appear scary. I think you and I are both used to it now because we've overcome that hurdle, but you have to kind of close your eyes and take a step back and remember what it was like when you first clicked that button to actually acquire Bitcoin and what it meant to memorize your private seed keys and things that are not natural muscle memories. And the fundamental principle of Bitcoin at the core is non-custodial self-sovereignty, right? In theory, that sounds great. In theory, the idea of the sovereign individual is the most powerful thing that you could ever hope for. But the truth is, most people actually don't want that much power either, right? And to give you a simple example, why do we generally try to use credit cards when we buy goods than your debit cards and just pay off the credit card anyway? It's because you kind of like the protection you get where if there was kind of a merchant related issue or fraud, you can call them up and say, hey, unwind that transaction. That was bad. Give me my money back. And that's great. Can't do that with debit, right? I mean, that's why credit gives you that one more layer of protection. And Bitcoin can feel like that at times where these natures of irreversible transactions can feel like that very thing that's empowering is the very thing that can cause a loss to you. So you do kind of want like some institutional stewardship of your money where you have somebody call, or you can have somebody to complain, or you can have somebody that will support you and provide guidance and feedback. I think it's one of the reasons why Bitwise has been able to be a pillar for the crypto industry. It's not because people are not believing of Bitcoin. They really like the ability to call someone at Bitwise, talk to them about it, but also know the ETF is a very safe, protected, regulated, compliant vehicle that shows up in their brokerage account, and you can look at it and naturalize it with other things that you're comfortable with and kind of sneak in there. So I think the reason people at the institutional level have struggled with it because it's very much at the core against the idea of institutions at some level. It is the most disarming thing of that control if you're thinking about that risk that otherwise you're provisioning for the private individuals.
How did you get orange pilled? Did you come to Bitwise already having this conviction in Bitcoin?
Sure did.
Okay.
Yeah.
And what was that journey for you?
Yeah. So I discovered Bitcoin pretty early in my career. So I started at Morgan Stanley as a derivatives trader in 2008. And so I got to see the global financial crisis from the front seat. And it really did a few things to the wiring of my brain. The first thing it did really was it made me realize everything I've ever learned about the financial system and whatever university education teaches you about economics 101 out the door. None of it mattered. It turns out you can just do things in the financial economy. And that gives you a sense of cynicism around what institutions themselves represent. And then the second thing that I got to experience is how volatility as a result of it can be, while terrible for certain investors, an opportunity for others as well. And volatility itself is actually a sort of a monetization technique of time in itself. And that really just gets you thinking a lot about what scarcity means and what abundant liquidity, what abundant ample reserve system looks like that the Fed is pushing. And then when I read the white paper for the first time in 2010, it was really interesting.
Wow, you were really early.
It was very early. And it's because actually back then there was a circle of traders who actually would look at Bitcoin in the context of gambling. Mainly because you can use Bitcoin to settle winnings across poker games and things like that. So even though I didn't get into it that early, it was something that I had been aware of. And then it was only until 2013 that I bought my first Bitcoin, because that was when Coinbase had actually launched as a Y Combinator backed startup, and it gave you a more optimistic version of what an exchange could look like that wasn't really readily available in the US before. If you bought Bitcoin back in the 2010 era, you were doing some strange things. But in many ways, that of course was the alpha, right? Like how to self-custody this thing that's very challenging to access. And that's why, anyone who has bought Bitcoin pre or post Coinbase era is already a line. This is the line between true cypherpunks versus those who are still waiting for something institutional. I was still waiting, I think, for some safe access point, which was 2013. And crypto was at the time already relatively well known in South Korea as well.
Oh, okay.
And
because you're Korean.
And I'm Korean.
Yeah. Okay.
Yeah. And I think Koreans also gravitated towards crypto because in their own financial history, they understand the delicate nature of what it means to be at the whims of the dollar hegemony, right? On the other hand, having faced the IMF crisis in 1997 as a national humiliation, they understand that these local currencies can have some devastating effects that you cannot control with the exogenous risk. So I think all of those things contributed to, at least for me, like a readiness to accept a hedge and consider not Bitcoin as like a maximalist endeavor, but a necessity to thinking about a new world order where it's an affordable hedge that everybody should have the chance to implant that optionality. So it started for me as an optionality. And over time, in the professional journey that would emerge for me starting in 2017, I really started to pay attention more to not just Bitcoin, but what is happening broadly at large in the industry. And that got me more interested in the perspective that one day these things may also come back together for Bitcoin too.
That's awesome. I wish I got in 2013. I was 2017, class of 2017. For people watching who might have people in their lives who are against Bitcoin or really skeptical or they think they're too late, what's your message? Because I tweeted and it went viral that I was at a restaurant and I met a group of people and I shared with them that, I work in Bitcoin. Asked if they invest in Bitcoin, and they gave me all of the FUD you could possibly imagine. They work in TradFi, they work in finance, and it was like, too much energy, it doesn't do anything, no cash flows, you don't know who Satoshi is. You heard the works. How do you respond to people that are newcomers?
Yeah. I always ask everyone to understand that financial history is very short. Most humans only live 70 years on average, in which like the cycle of money doesn't rotate very often. But if you study the history of money, it always resets. So that's kind of like a fundamental background assumption you have to have. And we really have to challenge what the monetary order looks like post-global financial crisis to now. And I think it's so crazy. It's now almost over 20 years. And yet the reason people keep referring back to 2008 was because that's when a lot of the social contract of the role of the dollar truly, truly broke. One amazing stat I will share with you is the balance sheet of the Federal Reserve back in 2008 was something close to $800-900 billion.
Yeah. And then it went to trillions,
Yeah. And so that's about 6% of GDP. And if you were to equate that growth linearly with our GDP growth as we've experienced for 20 years, that balance sheet should be roughly around $1.5 trillion. Today, it's not $1.5 trillion. It's $7 trillion, which means it's 20+% of our GDP. So already there, you can see something is awry. And so if you believe that like financial orders can change, that's the first thing. And then the second thing is like, why is it changing, and understand it, then the Bitcoin theory becomes so obvious. And so what happened from 2008 and on, the Federal Reserve adopted what we now commonly call as an ample reserve system or an ample reserve regime, which is really at the core challenging the role of interest rates, right? Because back then, before the ample reserve construct, the way that banks would pledge their paper to the Fed to earn a rate was really determined by the market itself. And so the bank reserves were priced accordingly to what was available by demand and supply. And so the Fed really would have to control that market dynamic to set the interest rate policy that they want. But post 2008, what has happened really, and actually has been doubled down upon since 2019, is they are essentially fixing the rate by decree. And they will provide ample reserves that banks can put indefinite money across here to the liability stack and push out that rate, which means this rate is no longer determined by the market. It is literally determined by a human, by decree. And when you introduce those kinds of artificial technocratic manipulation, you can do a lot of things. So it really isn't an accident that the reserves grew. It just got untethered and unanchored to what markets should be rationally pricing. And so, well, how do you fight back? You have to fight back abundant liquidity. And the opposite side of abundant liquidity is scarce liquidity. And the only way to have scarce liquidity is to actually have collateral and commodities that cannot be printed out of thin air. You know this very well. We all believe this is why the Bitcoin thesis is so profound. And then I think you have to then give yourself the chance to imagine why it's important. So, you know, it's not going to work at a restaurant, but I think the key unlock here is be flexible in your mind to understand financial history changes, and it can change fast. And GFC feels like it was a long time ago, but man, in that 20 years, what has happened is an incredible thing. And you know, we're at an inflection point where people are being more aware of it.
Absolutely. That is so well said. And we've just been blowing up bubbles and kicking them up. And now it's at the currency level. And so they're just going to keep printing. We know that. It's just math. And so Bitcoin, thank goodness, is a solution for us to find and discover. It's crazy. It makes me sad that so many people aren't discovering it yet because they need it so badly. And so many people are struggling. And I'll be honest with you. I mean, before I dug into Bitcoin, I didn't pay attention to the Federal Reserve. And it's so important what they do and how they're manipulating interest rates and all of these decisions that are made by fallible humans. A lot of people just don't pay attention and they don't take the time to learn. And so, of course, they also don't learn about Bitcoin. But you guys are putting out great research, information, education, always at Bitwise. Thank you so much, Jeff, for joining me. Any final thoughts or anything we didn't cover that you want to share?
No, I love the show. I love that you've always been true to your heart of what's the most important asset in the crypto universe, which is Bitcoin. I do share this belief at some level that Bitcoin is going to be the gateway for many people to enter the arena of crypto. And at the core, you spend enough time in it and you dibble dabble a little bit on MetaMask and push different buttons and get to experience DeFi, and all of them eventually come back to Bitcoin. And there's a really good reason for it. Bitcoin is the scarcest, hardest asset known to man. And it is the social covenant that I think will supersede the dollar as we've known it in a way that hopefully in the future will be synergistic for both American exceptionalism.
Wow, we got to put that in a quote. That was amazingly said. All right, Jeff Park, thank you so much. I'm going to link to your bio, your work, your Twitter handle. Thanks so much for joining me.
Thanks for having me.
Thank you so much for checking out this episode of Coin Stories. Make sure you're subscribed to the show so you don't miss any new episodes. And if you can, turn on those notifications and leave us a positive review. They really help the show grow organically with new listeners. We have a free weekly newsletter. You can sign up at thenewsblock.substack.com. This show is for educational and entertainment purposes only. Nothing should constitute as official investment advice, and you should always do your own research. I'm always open to feedback and guest suggestions, so please feel free to reach out at info@talkingbitcoin.com. I'll see you next time.